All right, there we go. Everybody should be able to hear and see the screen. Okay, excellent. Welcome. Just had a little issue with the controls here, but it should be fine. All right, we are going to dive right in because we do have quite a bit to go over. Today we're going to talk about the main reason some supply demand zones work and others don't. There was always one main reason there. And let me start high level for a moment. If a supply and demand, if price comes back to what appears to be a supply and demand zone, and by the way, a lot of people think they know what a proper structure supply demand zone looks like, but they don't. I find a lot of people are in that camp. But either way, if price comes back to what you think is a supply and demand zone and it goes through the zone or right through the zone, it doesn't turn, obviously, clearly, it's because there's not a supply and demand imbalance there or not enough of a supply demand imbalance there to cause prices to turn, right? Yes, we are going to look at examples for sure. So that is the main reason. Now, how do we, what we want to focus on is what are the steps, what are the rules to determine whether a supply and demand zone has a large enough imbalance or not. And that's what we're going to focus on today. Does that make sense? We'll get to as much as we can, and we'll go as deep as we can. Anyone that wants to take this specific topic deeper, you can always come to one of the complimentary workshops, one of the free workshops here. I don't do many of these, but I happen to be delivering that one on Saturday coming up in a couple days from now. There's the link in the chat if you want to spend more time on this, you can always register in the link in the chat. This Saturday one, I probably won't be doing these next two or that next one, but the Saturday one I will for sure. All right, let's dive into the topic. And so it's all about supply, demand, and fair value, right? And I know most people understand that. In other words, how and why prices turn and move in markets is all about supply, demand, and fair value. Let's talk about fair value for a moment. Fair value is the price level or price range where the majority of buyers and sellers in a market agree to buy and sell, right? And we could be talking about any market there. It doesn't have to be the financial markets. It could be any market. The market for food, the market for clothes, appliances, cars, automobiles, homes, doesn't matter. Supply, demand, and fair value. Price spends most of its time in fair value because that's where the majority agree to buy and sell. Sometimes something happens in a market and prices move higher, right? And eventually reach a level where supply exceeds demand. Competition to sell its supply pushes price lower. Just like sometimes prices decline, and we can talk about why that is. It's all supply and demand, but come down to a level where demand exceeds supply. Competition to buy at demand pushes price higher. The entire time, right, fair value is naturally pulling price back to it. So it's this whole governing dynamic, right? The governing dynamics of supply and demand. It's all this push and pull concept, and it's all because of this supply-demand relationship that is ongoing. Now, if we all agree with that, and then let's start to focus on what this looks like on the price chart, because we're about to answer the question, why do some supply-demand zones work and others don't? Okay, and I'll provide a very specific rule here in a moment. So here's what the picture of supply, demand, and fair value looks like in a price chart. First, let's talk about fair value. There are two characteristics that represent fair value. To identify fair value, you want to focus on those two characteristics. One, where's the majority of trading activity in a market? Okay. Clearly, there's a lot of trading activity here, and we'll be able to see this on other charts soon. We'll look at that today. So the amount of trading activity, right? Clearly, a lot of trading activity here. And as we look at full charts in a minute, bigger charts in a moment, you'll see relative to other areas on the chart, that's a lot of trading activity. Number two, characteristic number two, and also very important, notice the wide and whippy trading activity in here. Specifically, the price has such an easy time moving up and down through this area. Someone tell me in the chat, why is it so easy for price to move up and down through this area? I'll give you a hint. Something is missing in here that allows price to move up and down so easily. What is it? And we're going over this to arrive at the answer. Why do some supply-demand zones work and others don't? But why is price able to move up and down so easily through this area and so quickly? Right. I see you're in the chat. You wrote resistance, not much. Let's talk about that. But first, make sure everybody understands when we talk about supply and demand, that this is very different from the conventional term support and resistance. But having said that, well, is there likely to be a significant supply? There you go. Exactly, Carlos. You took the words right out of my mouth. Okay. The absence of a significant imbalance. There's plenty of supply and demand in here. There's plenty of buy orders, sell orders, plenty of people that want to buy and sell in here. What's missing, what's not in here is a significant supply-demand imbalance, and that is why price is able to move up and down with ease. That's why we get so much trading activity in here. Now, specific to supply-demand zones, okay, follow the chart here. Watch where I'm pointing. Notice in the beginning here, rally, base, rally. Price goes right through it. Rally, base, rally. Rally, base, rally. Right on top of each other. Price goes right through those. Right over here, drop, base, drop. Price goes right through it. Rally, base, rally. Price goes right through it. None of these work. They all fail and fail fast. Those, what looks like a perfect supply-demand zone, structure-wise, they're great. But price goes right through them. None of them work. Why? Because of location, because they're inside fair value. Does that make sense? Everybody kind of on board with that, on the same page with that? Everybody understand? We're going to move on. But the number one reason that obviously let me say it this way, the only reason why a supply or demand zone would not work is because there's not a large enough imbalance in that area for prices to turn, right? Clearly, we know that. So the only reason why you would have what looks like a supply or demand zone that doesn't work is because it's in the wrong location. Specifically, it's inside fair value. Our rules at the Pinnacle Institute say we do not supply demand zones inside fair value, specifically near the middle of fair value especially, do not qualify. Does that make sense? That's why our rules focus on two things and two things only, structure and location, right? If we have a supply or demand zone that qualifies as far as structure, where is it located? So step one, identify fair value in whatever market you're looking at. And then we simply look above fair value for our qualified supply zone and below fair value for our qualified demand zone. This is by far the number one, the main reason why a supply and demand zone or supply or demand zone is going to work or fail. And it's all about the imbalance. Location is key here. Make sense? Now, let's go look at, we're going to dive into the live markets in just a few minutes. But let's take a look at a screenshot from one of our live sessions here. And so I deliver these live trading and analysis sessions every morning, 5 days a week. That's the screenshot you're seeing on the left here. And all of you will have an opportunity to be in this sessions for a week if you like, but talk more about that in a bit. Yesterday and the day before, we were looking at this. We had this in here is us and our members down here. That's who's chatting, if you're wondering what you're looking at here. Anyway, price in this market, this is a major stock market, was rallying and nearing a supply zone that was outside the range. Notice the location of this supply zone. It's way back here. You can actually see it right up here. See that little candles there? It's right there. Anyway, so if you look at the location of the supply zone, it's above all of this, right? This right here is this over here. Does that make sense? The supply zone up here is above all of that. And I just wanted to bring a quick example from the last couple days. The stock market just dropped yesterday and today. You can see yesterday's high, the Russell, which is a major stock market, the Dow as well, came right into this outside the range, outside of fair value area. And this is not current fair value, by the way, but came into this outside the range supply zone. And again, supply or demand zones that are outside the range, outside fair value, typically have a much larger supply-demand imbalance than those inside fair value. And again, that's the difference between supply and demand zones that have a high probability, chance of working, and others that don't. It's all about how big the imbalance is. Right? We need to get away from fair value, outside of fair value. You can see the Russell here yesterday did. That was the high of the day in the Russell. And yesterday we dropped. Today we gapped down right back into here. Does that make sense? Okay. So remember, step one, we identify fair value. We ignore anything that looks like a supply or demand zone in here because the imbalance is low, which means the probability of them working is low. We then look above fair value for a qualified supply zone and below fair value for our qualified demand zone. Okay? And then here's an example that just met entry yesterday of exactly that. There are other little, if we go to smaller time frames, there's plenty of little, supply and demand, supply zones in here, demand zones in other areas here, but if they're inside the range, they don't qualify. Rules are key. Okay, let's go to the live markets. And by the way, I can go to almost any market you like. So if you have I have a whole list of markets that I plan on going through here and can go through, but any market you want to look at, it doesn't matter. We could be literally looking at anything. We can definitely start with the euro. And again, let me just do this. So if you want more, we're going to go over plenty today. But again, if you want more information, you always click on that link, and you can always attend the workshop coming up. It's free. In case you end the session and you have questions that you didn't get answered or anything. Sure, yeah, we could definitely start with the euro. And looks like you want to start with the spot euro. No problem. And remember, this is just supply, demand, and fair value. So we could be looking at any chart, right? We could be looking at a chart of the price of jelly beans. It'd be the same conversation, wouldn't it? Okay. So looking at the euro, we are going to come over here and focus on this chart. Okay. So we can see that recent and relevant fair value area, we're just right in it right here, right? And the last one was sitting right below it, okay? Outside of that range, we have a qualified supply zone, 109.53, right? So remember, we see this, and we need to look above it. This is a very large time frame, by the way. We can go to a smaller time frame, for example. Let me do that, actually. Right? So you see how, you have, you're going to see supply zones in here. Look at these demand zones here. Look at that, right? I mean, maybe there's one, I don't know, maybe a little bit there. Price goes right through those. There's other stuff in here, but it's very low probability because it's inside of all of that. So, again, we want to go above it, follow our rules. Remember the two characteristics. Where's that recent and relevant area of fair value? We have a very rule-based way that we do it. Today, just kind of going over the two characteristics, right? Step one in learning this. They're right here. Where's that majority of trading activity, that recent and relevant area? Notice the wide and wimpy trading in here. We then look above it for our qualified supply zone and below it for our qualified demand zone. Notice the location of this demand zone has to be right below, or not right below, but it has to be below that. Okay? When you get outside of these areas, the imbalances typically are much, much greater. Notice over here, if I look to the left, price could almost came back to that supply zone, but couldn't. There's a reason. Likely to be a big supply-demand imbalance up there. Okay? Let's just scrolling back in the chat here. Gold, we can definitely take a look at gold. Gold actually has some great areas coming up. Let's go take a look at gold, and then we'll look at the, Andy, we'll look at the NASDAQ and S&P after that. Let's get to gold here, though. Now, I don't know if you want the gold futures or the ETF. I'll start with the futures. If you want me to switch to the ETF, just say so, not a problem. And again, all we're doing here is properly quantifying supply and demand in whatever market we're looking at. So it doesn't matter what market we're looking at. We could be looking at we could literally be looking at a market for anything, food, right? Cars, clothing, anything you could possibly buy or sell, we can look at that. All right, looking at gold. Yep, we can definitely look at oil too. So if we start with, so you can see for the last few days, right, about the last week, we have this range of trading in gold. In our sessions, we've been focusing on this 1931 quite a bit because it's the first supply zone we're coming into that is outside the range. Now, we color code our supply demand zones based on probability. So the circled zone here means it's an overnight zone, which is typically lower probability, but because of its location, meaning outside of all this, that brings that probability back up. Does that make sense? Okay, so we'll watch the 1931. Now, let's go to the daily chart of gold. In fact, let me just go back over here. Not here. Let's go here for a second. And let's look at, this is the, I've just clicked over here because this is the workspace we were going over this morning. And I thought we had, oh, that's not gold. That is not gold. Here's gold. So we look at the daily chart of gold, okay? We see the last 4 or 5 days, we're just in this range here, right? We see above that, yes, we have the 1931. That's a supply zone on a smaller time frame, but above that, there's the 1947 supply and the 1882 demand. Okay. So, and again, don't forget, this area right here is just before that daily area. So that's likely to be the next, the current, that's where the current range in gold is likely to be. Fair value, right in the middle. Okay. All right, let's keep going. So if we move over to the NASDAQ, let's do that. So the NASDAQ recently, yesterday, came into a nice outside the range supply zone for us on a very small time frame. Normally that's not the case. Normally we don't have to go to a small time frame like that. But you can see we came up to and poked through this area just a little bit, but sitting just above this supply zone, there was another little supply zone sitting right there. So that was the high in the NASDAQ up here yesterday. And now, let me show you what we're coming down into. Let's look at the demand side of things. And you know what, for that, we're going to go to, and I'm looking at the futures. If you want me to look at the QQQ, I can do that as well. So we don't really have a, whoops, here we go. Again, sticking to our rules of having of location, the demand zone that's better probability needs to be below this pivot right here, right? It needs to be below the pivot. Make sense? So we have the 11,269 down here, and we're certainly not even close to that at the moment. Still 100 points away from that. Okay. As far as the S&P goes, we opened up into this demand zone today, rallied out a little bit. Now we're just kind of back in this area. Maybe with the S&P, let's look at the SPY. Since we looked at the NASDAQ futures, why don't we look at the S&P ETF? But can you see how, like, when it comes to, all these different markets, they don't matter. It doesn't matter what market we're looking at. We're applying one rule-based strategy. When I say rule-based, we're not talking about a lot of rules. We're talking about very, very few logical rules, all based around the laws of supply and demand. Okay, so this is actually should be a 60-minute chart, so let's do that. So right now we're just we're sitting in this area right here. Can certainly rally from there, but the higher probability demand zone is sitting just below at 386 SPY. Okay, so notice price almost touches this zone, but can't. We have a term for that at the Pinnacle Institute, and that suggests that there's a big supply-demand imbalance here. And then we have an inside the range supply zone in the 393 area. The reason why this zone is gray is because it's inside the range. Okay. If it were, notice this zone right here, see the location of it? It's inside yesterday's decline in the market. Compare that to, let's go back to the NASDAQ for a moment. And you'll see that, notice that supply zone, that's yesterday's high, right? So this was outside of this range. And we had a number of supply zones up here as well. For example, if we go to the Dow, same thing. Yesterday we ran into our same area up here as the NASDAQ. So notice the location of that, and certainly that, right? See the location? Now let's go back to the SPY. And this chart right here. Oops, I'm sorry, this one. Okay. So now you can see the location of this one is inside the range. See the difference? It's very important. Our rules say if we're going to take this type of zone, we reduce our risk by half. Lower probability, right? We don't want to risk too much money there. Higher probability, we want to risk as much as we're willing to lose, right? You know, and I'm kind of speaking as if like assuming everybody gets that and all that, but let me phrase that in the form of a question. Should we always risk the same amount of money on a trade or investment or what have you? Should we always risk the same amount of money? And of course, many people do, and it's okay. But if you think about it, and let's all just speak from the laws of supply and demand, right? Okay. The further we get away from the middle, a lot of people like to call it equilibrium. I don't like to call it equilibrium exactly. And yeah, Ricardo, exactly. Depends on the odds. And what determines the odds? Location, right? Either we're close to fair value or inside fair value, or we're far from fair value, and our supply-demand zones are well outside of fair value, right? Exactly. Now, no one should ever risk more money than they're willing to lose. But if the maximum amount you're willing to lose is whatever number that is, if it's an inside the range zone and your profit zone is, too small, maybe you want to risk half that. Should all be in rules. Now, we have members at the Pinnacle Institute, some that say, some people don't take any inside the range zones. They only focus on outside the range zones. Their trade count goes down, but they're focused on areas that are typically going to have a bigger imbalance. Does that make sense? All right, so there's the SPY and the NASDAQ. I think I covered all the markets you asked for, but I may have missed one, so let me scroll back. Oil. We didn't go to oil. Let's go to oil. YM, yeah. Why don't we look at YM real quick before switching to a whole nother asset class? YM will be real quick. It's basically the same scenario. Okay, we're going to see that we have our closest supply zone, I believe, is right here, the 33,643. Now, it looks like you trade or watch YM. The Dow is probably the weakest equity index market at the moment, but we do have this supply zone up here, 33,645. And then on the demand side, we would be looking, you know what, it's actually going to be quite a bit lower. But it's a good but perfect lesson on getting outside the range, right? So we have that supply zone just a little bit higher. It's actually not a little bit higher. It's all the way up here, right? Well, let's just be clear. Okay, right here. Yeah, so right up here, 33,645 on the supply side. On the demand side, if you want to get high probability and below the range, that's going to be, this one right here. Down here in the 32,395 area. You see how this demand zone, now it's a circle, so it's a little bit lower probability, but it's below all of this. So structure-wise, it qualifies. It's okay. It's not great. It qualifies. It's not a highly qualified zone, but it does meet the minimum requirements. So structure-wise, it's okay. Location-wise, it's very good. Does that make sense? I see your question in the chat. Often we can look at, like, remember gold had we saw those the supply zone on the daily, the demand zone on the daily chart. Good location on both of those. Often we can go inside that, right? We can go inside that and on a smaller time frame, and you'll see a zone sitting in there. You got to be a little careful doing that, though, because you don't want to play with the market's actual supply-demand equation in those areas. So often it's best to just take the zone as is and then either reduce or increase position size depending on how much you're willing to lose on on the risk side. All right, let's go take a look at oil. Oil's kind of quiet at the moment. Well, I guess it's not. I guess it's starting to move. So oil, we'll look at. There is that's the 4-hour here. Oh, this is gonna be a great example of location. Not so much this one, but 77.75. So this is an inside the range demand zone, a little bit lower probability. Now, this 84.15 is clearly the outside of the range supply zone according to our rules. Higher probability. You see that? Now watch this. Now you see this high right here, which is 82.71, right there. So we need to get above that and above that, which brings us to the 84.15 outside the range, outside of fair value supply zone. Higher probability. Now, look at this. We're coming up to this, what will, drop-based drop. To a lot of people, that's a perfect looking supply zone. But look at the price. It's at, let's just call it 80, the middle of it's 80.50. And see how price, prices, got stuck there for, there's a 30-minute chart. So for about an hour and a half, price is kind of stuck in here, right? It's not like there's no supply here, but price isn't turning, right? And now it's popping through it. But look, so 80.50 is right here. Does everybody see that? This is a great example of why location is so important, right? We're not interested in inside the range supply zones. Does everybody see that? That supply zone I just showed you. Now we're looking at a bigger time frame is right here, right inside of all this. Low probability. Higher probability up here. In fact, you can't even, it's almost not, it's not fair to compare those. The size of the supply demand imbalance up here compared to a little zone inside here, it's extremely different. Does that make sense? Ricardo's asking a great question about the trend direction. Okay. Oh, I think you have it on private there. You can ask that. No issue asking that to the group there. But if you want me to answer it, I have to obviously read it. But question: should I always operate in the trend direction? No. Well, let me say it this way. In our world, in our set of rules, in our set of rules, trend is not even considered. Like, for example, if you were in our live trading sessions for a week, I would be shocked if you heard anyone say the word trend or even read the word trend in the chat when there's hundreds of members in there. It's just not a part of our vocabulary. The reason is, what is trend? Trend is just price moving, right? And you can't really combine conventional trend trading with what we're doing here, because price always has to go up to get to your supply zones. Price always has to move down to get to our demand zones. You see what I'm saying? If you think of trend in a conventional sense, right, the higher highs and higher lows, what does a trend trader do? They don't buy it. They don't buy at demand. They let prices turn higher at demand. They wait for a series of higher highs and higher lows, and then they buy. They don't sell at supply. They let prices turn lower at supply, and then they wait for a series of lower highs and lower lows, and then they sell. Right? Okay. Let's go back over here for a moment. Oh, I'm going to take you to another market. So another major market that we saw running into supply recently that we're very focused on is the DAX. Okay. So I'm going to put this here. So we have the DAX into supply, and you could see just today it came down to the first demand zone. Now the chart on the left is a very large time frame chart. That's a weekly chart. And we have a 120-minute chart over here on the right. So into this week, at least so far, we've had 3 of our live trading and analysis sessions, at least in the equity index markets. Buying has been, buying has been just an absolute no, only because we've been right up against a number of supply zones, especially this larger time frame supply zone here in the DAX. So we need to get away from that, right? So it looks like just today we came down to our first demand zone and we're getting a little bit of a bounce there. We have a new inside the range supply zone developing up here. But another little kind of note or piece of information. Well, let me touch on something that's unrelated to what we're talking about today. So yeah, no, so AD, I see your comment in the chat, and I would say that trend trading, or the word trend, is probably the most popular trading strategy on the planet. I mean, the vast majority of people use trend, focus on trend. So you're not alone there. I mean, that's what most people use, right? Trend lines. The vast majority of people, traders, investors, they focus on trend. Most schools of thought focus on trend, right? But someone tell me this, right? What's another stat that that we also are pretty confident about in the trading world? The regulating bodies are pretty clear on this. And even if they weren't, I think, any of us that have been in the industry for a while know this. Let me be direct with the question. What percentage of traders lose money in the markets? What percentage of active traders lose money in the markets? And I know nobody knows exactly what it is. It's a big number, right? Available research suggests that the vast majority of active traders lose money. Yeah, a lot of stats you look at out there say 90% or higher. So think about it. What's the most popular trading strategy out there? Right? And then think, okay, right. So we know what the majority of traders are doing, and we also know the majority of traders lose money. Make sense? Now, but what's the flaw? What's the flaw in, if you run a business out, let's say you have a business out there that has nothing to do with trading, whether it's trading or any other business out there, anything. Maybe you run some kind of company. Maybe you own a gas station. Maybe you own, you work at a retail store, or you own a retail store. I don't know. But in any of those types of businesses, whether it's the gas station on the corner or big Amazon or whatever, everything in between, how do all these businesses make money? They buy at wholesale. Yep, they buy at wholesale and sell at retail. Is there any other way to do it? Another way to say that, buy at demand, sell at supply, right? Again, we're not reinventing the wheel. I'm not, nobody owns supply and demand. I consider myself just the messenger, one of the messengers, right? It's just, this is supply and demand. This is how the markets work. So when you start to add strategies like trend and indicators and oscillators and chart patterns, what do all of those things have in common? Do they have us buying at demand, or I should say buying at wholesale, selling at retail? No, they all have you buying after a rally in price and selling after a decline in price. Is there any company or business out there that would make money doing it that way? If you had a retail business and you were buying and selling based on the trend concept, Would you make money? No, your competitors would shut you down right away because they're buying at wholesale, selling at retail. Your rules would have you, buying higher and selling lower. I think you get the point. So, and the only reason I kind of jumped on this a little bit more than I normally would is because, look, the reality is the majority of people lose money. So we should spend a little time on that, right? Anyway, two of the big reasons why are likely buying and selling inside fair value. We don't want to do that. And this, and of course, to take this a little bit further, if you're using any strategies that have you, where your entries, you're buying and selling, where it's lagging, right? If you're buying after rallying price or after a drop in price, you could very well be buying and selling in fair value, and that's not going to work. Okay. The majority of trading activity will always be inside fair value, and we know that the majority of buyers and sellers out there lose money. So what you can take from this session, and again, don't take my word for any of this, just think the simple logic through for yourself. I mean, take my word if you like, but this is just, we're putting a supply demand filter that we all understand, right? We've all understood from a young age. We're just putting this around the financial markets and any market out there, right? So to make sure we're all clear on today's topic, why do some supply demand zones work and others don't? The number one reason is location, buying and selling inside fair value where there's a lack of a significant supply demand imbalance. Okay? Everything starts there. Once we get outside of fair value and decide to sell its supply zones outside of fair value or retail prices, buy at demand zones outside of fair value or wholesale prices, then we can properly assess profit zone, risk and reward, entry, stop, target. Everything stems from that. But if you're trying to make any of that stuff work inside here, not likely. Okay. On that note, again, if you want to take this deeper, I'll be doing that on that workshop on Saturday. Again, I don't normally deliver these, so I don't think these other two, but Saturday the 21st, I'll be there. Anyway, it was good spending time with everyone. Hopefully this was helpful. And again, we'll take this, we'll have time to take this a little bit deeper on Saturday, but if you have any questions, if you do happen to, you can click on the link in the chat if you want. If you have any questions between now and then, you can always come to that session and ask them, right? You can always just say, no worries. You can always say, hey, I was in the FX Street session. I have this question. Don't feel bad. If you have any questions, you can always ask them in that Saturday session. I'll be there. All right. Good to see everyone. Hopefully that was helpful. Have a great rest of your day, and we'll see you next time.